It's also important to understand that April 15th is also the deadline for two other big chunks of money. And this is really, really key for you to get in your head early on. So we're talking now in November. I like for people to be thinking about this now, because now you have a couple months to be setting aside and budgeting. But if you don't think of this until April 1st, you're out of time and you are not going to come up with, a couple thousand extra dollars. So the two other deadlines that happen on April 15th are your first estimated quarterly payment is due. Okay. So that's for the current year, right? Your tax payment is for the prior year. You have to settle up any outstanding balance of taxes that you owed from last year. But your first estimated quarterly tax payment is a tax payment for this current year, right? So April 15th, you've had 4 months through the year. You're paying your taxes through the end of March by April 15th. In addition to that is the most important deadline, which is the deadline to contribute money to your IRA. Now, your IRA, it is retroactive and it's wonderful. So you can take up until April 15th to contribute money to your IRA that will count for the prior tax year. In other words, it will give you potentially, if it's a traditional IRA, a tax benefit on that tax return from the prior year. It's really great. But what happens is if you're behind in your tax system, if you're not organized and you're not paying quarterly taxes regularly, so you get behind in your tax payments, what happens to people on April 15th, and I say this because I have seen it over and I built my whole project, my whole program, Money Bootcamp, to help teach people how to not be in this situation, how to get out of it and how to stay out of it. What I see happen to people is that you intend to fund your IRA. You want to fund your IRA, but that tax deadline comes and you're behind on the money and the bill is bigger than you thought it was because you didn't realize self-employment tax was such a big part of it. Plus, you owe taxes for the first quarter of the current year. And what happens is you run out of money. You just don't have any money left over after those two bills in order to contribute to your IRA. This sucks. It is such a bad scenario.